So we've got all of our amounts listed here in the book for what we're going to use for the post-closing trial balance. It's not going to be for the same business for sections 1 and 2. And you just have the example of the post-closing trial balance on the page before that, on page 496. So we've got our postcodes. So for the current year, the balances for Visual Arts Center's balance sheets and accounts after adjusting and closing entries. Here's all of our amounts. So you can go back and forth and just match everything up. Or see, we'll start here at the top. Remember, we got to do our header. Visual Arts Center. This is the post-closing trial balance. And December 31st, make it 2018. So everything here in the book is in order down here, but we don't have every single account that's listed in the example is not listed here. So we'll start with cash on our first line. And as you can see, it goes in the debit column. I'm not going to flip back and forth, but just so you know, so you have an example. So it looks like you're going to have more accounts for the on your section. So the cash amount, $21,810. That's going to go in the debit column. Then we've got petty cash. $350. We've got our AR, accounts receivable, $83.98. Our merchandise inventory, we've got a big number there. I'm going to go ahead and abbreviate that one. Then I'll have to write it out. I'm taking the lazy way. 190, 980. Then our supplies for the office and the store. So we got $13.14 for the office. $22.68 for the store. And we've got our prepaid insurance. $19.80. So now we've got, let's stop it at the prepaid insurance. Now we've got our accounts payable. So all this stuff are assets. all these items that I've at so far, all the way down to prepaid insurance. Those are all assets. So now we have our liabilities, stuff that we have to pay out or can be considered payouts. So accounts payable. So I'll put AP for accounts payable. So that's 11,000. That's going to go in our credit column. 11,676.50. Our sales tax payable. $1,584. Capital stock. It's 100. And then our retained earnings. It's 113. 840.50. So all we're going to do there is just draw a single line under that. And add both of these columns up, and they should be equal. So just like it shows in the example, of course there's a lot more things listed on the example in the book, which says once you get everything down, then both your columns totaled up are going to be equal to each other. So remember that chapters 1 and 2, debits and credits, at the end of the day end up being equal. So 11,676.50 plus 1,584 plus 100,000 plus 113,840.50 comes to $227,101 even. Then we add up this column, should come out to be the same. $227,001. So there's your post-closing trial balance. Not too much to it. So we got 1, 2, 3, 4, 5, 6, 7, 8. So we just got 4 more things down here in the on your own. So we've got depreciation for equipment, federal income tax, allowances for uncollectible accounts. So if you look at an example, like our allowances for uncollectible accounts, You can see that one's going to go in the credit column. Our depreciation is going to go in the credit column. So make sure when you do the on your own, instead of just kind of filling out your list like I did and getting down here to the bottom 5 or 6 and putting those over in the credit column, you make sure you kind of go back and forth to pick out the ones that are going to switch columns on you. Yep. So I'm done with the work together. So you can do the on your own. There's my tips for the on your own. Make sure you go back and look at the example, because there's a couple in the top part that are going to go in the opposite column. Add everything up, add the columns up. They should be equal. If they're not, then